Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a update on a dividend stock here. This is Radian, and I'll show you the article that I came across that brought this one to my attention. But it doesn't look too bad. So, Radian, ticker RDN. Here's a look at what they've done over the last year. So it's up about 11%. So I mean it's up and down, but overall it's up 11%. So not too bad. Here in the last 3 months, it's down or up 7.38%. In the last month, 6.84%. In the last week, up 0.72%. And here's a look at today. So that's the only one that's been in the red is here today. But as I always say, not that I give tax, legal, or trading advice, but it always does present a buying opportunity if you're looking to get into this one. So currently at 23.23. If you don't know much about this one, they engage in the provision of mortgage insurance, risk management products, real estate services to financial institutions. Operates through the mortgage and real estate segments. Founded in 1991. Not a whole lot of volume on this one. 1.21 million and an average of 2.01 and market cap of 4.15 billion. 52-week low of 1917 and a high of 25.31. So you get a little bit of appreciation in there along with the dividend yield of 2.29. So not too bad. Ratings on this one are at 67%, and here's a look at their really did a great job on earnings. Estimated 69 cents and actual was $1.07, so about a 38 cent on the upside there. So not too bad. So like I said, I just come across this one, Microsoft Bing, showing this one as a buy with a 1 year upside to 28.39. Here's the article that brought this one to my attention. Why Radian RDN is a top dividend stock for your portfolio. As you can see, this just come out yesterday. So whether it's through stocks, bonds, ETFs, or other types of securities, all investors love seeing their portfolios score big returns. However, when you're an income investor, your primary focus is in generating consistent cash flow from each of your liquid investments. So I kind of like both growth stocks. I don't have a whole lot of ETFs. That's something that I probably need to get more of. I just don't. I like the return on the stocks that I have, so therefore I don't have too many ETFs. But I also do like dividends. So. And Radian in focus. So based on Wayne Radian is in the finance sector, and so far this year the shares have seen a price change of 9.42%. The mortgage insurer is paying out a dividend of 0.2 per share at the moment, with a dividend yield of 3.46% compared to the insurance multi-line industry yield of 1.71% and the S&P 500 1.45. So you can see we're double the S&P on this one, so can't complain about that. So taking a look at the company's dividend growth, its current annualized dividend is of 80 cents, is up 46.8% from last year. In the last 5-year period, Radian has increased its dividend 2 times on a year-over-year basis for an average annual increase of 214.83%. Any future dividend growth will depend on both earnings growth and the company's payout ratio. A payout ratio is the proportion of a firm's annual earnings per share that it pays out at a dividend. Radian's current payout is 20%. That means it paid out 20% of its trailing 12-month earnings per share as dividend. And so, nice thing about this one, you get a decent dividend plus the appreciation on this one. They're expecting earnings to expand this fiscal year as well. The Zacks consensus for 2022 is $3.23 per share, representing a year-over-year earnings growth rate of 2.54%. Bottom line, investors like dividends for many reasons. They greatly improve stock investing profits, decrease overall portfolio risk, and carry tax advantages. Among others, it's important to keep in mind that not all companies provide a quarterly payout. Some do monthly. I have monthly as well as quarterly, so kind of best of both worlds. Big established firms that have more secured profits are often seen as the best dividend options, but it's fairly uncommon to see high growth businesses or tech startups offer their stockholders a dividend. Income investors must be conscious of the fact that the high-yielding stocks tend to struggle during periods of rising interest rates. With that in mind, RDN is a compelling investment opportunity. Not only is it a strong dividend play, but the stock currently sits at Zacks rank of 3 as a hold. So if you have this one, just hold it. If you're looking to get into it, might be a buying opportunity, but again, I don't give tax, legal, or trading advice. This just goes over how they beat the Q4 earnings and they raised the dividend. So Radian Group reported fourth quarter 2021 adjusted operating income at $1.07 per share, which beats the Zacks consensus estimate by 46.6%. The bottom line increased 55.1% year over year. The results reflected strong growth in the housing and real estate markets, along with sustained demand for products and services. And here's the chart that goes over some of that information, so feel free to pause and go over that. Here's some more quarter in details. I'm not going to go over every single detail just for the sake of the video. Feel free to pause that if you'd like. Radian Group Q4 profit increases, beats estimates. This is just some more information about it, which we kind of already went over. It looks like some of the same information, so feel free to pause and go over that as well. Here it kind of goes over some of their earnings and revenue. Radian Q4 earnings, a snapshot. This is found on sacbee.com. So on Tuesday, it reported a profit of $193.4 million in its fourth quarter on the per share basis. A Wayne, Pennsylvania-based company said it had profit of $1.07. Mortgage Insurer posted revenue of $338.4 million in the period. It adjusted revenue was $299.6 million. So for the year, the company reported profit of $600.7 million, or $3.16 per share. Revenue was reported at $1.19 billion. So it's got good financials, good growth, good dividend. So I'm considering picking up some of this one myself. So like I said, I just come across this one. Always like a good dividend play, but don't take my word for it. Again, I don't give tax, legal, or trading advice, so you'd have to do your own due diligence. Over here on Stock Twits, currently at $23.18, low of $19.17, high of $25.31. MACD histogram turned positive. Dividend increase. They hire exclusively women and minorities. This is great. That's interesting. So if you're looking for a job, you can maybe get a job with them. So over here on MSN Money, currently showing it as a buy, and over here on Tip Ranks, currently as a strong buy, 3 out of 3. The 24, almost 25% upside to 29.17, high of 34, low of 26.50. So you get a decent appreciation there, plus the dividend that you're getting. So again, that is it for Radian. If you have this one, go ahead and list it in the comments along with your cost basis, any other information you'd like to share, and if there's any other REITs or dividend stocks out there you want me to take a look at and do a video on, I'd be happy to do that as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing, and thank you to all the new subscribers, and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.